We're going to talk about how to make money trading crypto or trading Bitcoin. Lots of trade opportunities in the market. And there's something that you said there, Bill. If you get stopped out, you get stopped out. You cannot be, if you're going to trade, you're going to take a trading mentality, which I think is a good mentality to have towards the end of a bull market cycle. Why? Because you're jumping in and you're jumping out. You're jumping in, you're spending more time in stable coins, right? And less time in crypto, other than when you're in the middle of a trade. If you're letting your trade run and the market's doing well and you're long, great, you're making a ton of money. But when it's time to take profits on a trade, you're taking profits and you're getting out of the market and you're sitting out when the market's potentially dumping. You're looking for entries at the bottom of these dumps, right? So I think a trading mentality, as long as you're following good risk parameters, right? Good risk management can be a fantastic strategy right now, right? So here's a trade that I've been talking about for a little while here. And I think this trade was fine to enter even all the way up here at 63K, where we got us this initial support for Bitcoin, right? When we got this initial support for Bitcoin at around 63K, I think that was just a completely fine entry point. Why? Because our target here is $79,500. Let's talk about why I think Bitcoin can go to $79,500. Well, for one, we're in this big bull market. If I go to total cryptocurrency market cap here, yes, we're in a red week. We're in the middle of a red candle, which is on the back, by the way, of 7 weekly green candles, which when you get this bundle of green candles, right, even if it's followed by a bit of a decrease, and I'll zoom in here so you can see this back in all the way back in 2016, when you get this bundle, right, of green candles, even when it's followed by a corrective red candle or two, it usually precedes a big parabolic run up. And I think everybody's expecting some sort of big parabolic run up. We're getting a bit of a red candle here, but it's on the back of these green candles. Why do I think Bitcoin can go to $79,500? Well, we're looking for long opportunities in a bull market, right? Why look for short opportunities when the momentum is going up? So we want to look for long opportunities. But then why am I looking at $79,500 as a take profit point? Well, that's key resistance in the sense that it's where you can no longer go long on 2x leverage and hide your liquidation point against this big correction back here in Bitcoin's price down to $39,600, $39,700, right around here, depending on what exchange you're trading on, right? So if you can no longer go long on 2x leverage up here and hide your liquidation point down here, the buying pressure starts to dry up and it creates downwards pressure on the price of Bitcoin once it crosses that $79,000 threshold, right? We can see previous examples of this happen all throughout the history of Bitcoin so far in this bull market cycle. If you take the 2x margin pressure level off of this support level here, you get a perfect top up here at $58,000 where Bitcoin saw this big correction. Would have been fantastic to take profits up here, all right? So if we go over to our current price action on Bitcoin, we can set up a trade, right, with our take profit at 79,000, 80,000, 79.5, wherever we want to take our profits. We know there's going to be resistance up here, right? And like I said, I think even if you entered on this bounce at 63,000, that's a fine trade to take if you're taking your stop loss and putting it down here at about 57,200. And we're going to walk through why I picked 57,200. This is still a risk to reward ratio of 2.65. Now, if we entered down here on our margin pressure levels, right, our margin pressure level supports, this is these are the prices at which you can no longer, once Bitcoin goes above these levels, you can no longer go long at 3x or 2x leverage and hide your liquidation points against these corresponding support levels down here at 29.2, right, and 39.6, right? So we would expect as Bitcoin crosses this threshold, some buy pressure to start coming in. And I think we still may see a bounce here. We still may see some buy pressure come in because there's incentive to buy on 2 and 3x leverage. right? But why am I keeping my stop loss down here? Well, I like to take it 1% below our previous wick. We know that this is a strong support level, right? We know that this is a strong support level, and we've gotten support, right? We got our initial bounce off of this level. And I think buying at 58.5, even in hindsight, with a tight stop loss that's probably going to get stopped out here, buying here at 58.5 is still a good trade. Why? Because if our target is a bounce here up to $79,000, risk to reward ratio is 15.78. Let's just call it 16-1. That means that out of every 17 trades or so, you only have to be right one time, right? If you're wrong 16 times to break even, right? So out of 17 trades, you can be wrong 16 times, but if you're right once on this trade setup, you're still break even. If you're right 2 times on this trade setup at a 16-1 risk to reward ratio, you are extremely profitable. So it's okay, as long as you have the right risk to reward parameters, it's okay to get stopped out. It's okay that our stop loss down here is about to get hit at 57,200, because if we get stopped out, guess what? We're going to find another trade setup with a favorable risk to reward ratio. Even if our target isn't 79,500 and it's more realistic, right? And we're getting a bounce, we're expecting some sort of a bounce up to this downtrend line, right? Our risk to reward ratio on this trade is still 2.5-1, which anything above 2-1 is pretty decent risk to reward ratio. For simpler math here, if we move this to a 3-1 risk to reward ratio, I'm going to show you how it works, right? If our price target, when we're right one time, gives us a 6% return, 6.3% return, but our stop loss down here gives us a negative 2% return, we can trade this 4 times. And as long as we're right one time out of every 4, we've broken even, because that one time we've made 6%. The other 3 times we were wrong, we've lost 2% each time, right? So you lose 6%, you make 6%, you've broken even. And that's only being correct 1 out of every 4 times. So if you get stopped out, it's fine. As long as you're not over allocating your capital to each of these trades. Yeah, if you put your entire portfolio in on one trade and then you get stopped out or get liquidated, yeah, it's kind of a big deal. You've lost your entire portfolio. But if you're following good risk management, which I'm a huge fan of, taking 1 to 3% allocations per trade, right? You're going to have between 33 and 100 shots at getting this right. And we know we only have to be right 1 out of every 4 times if we keep our risk to reward ratio at 3.0. Now, moving back up to this target of $79,000, I would say even right now, it's a pretty good entry. If we move our stop loss down below 52,700, right? That's our next support level and next big margin pressure level where we could expect a bounce. Right? A lot of people think there's bidders here at around 53.5. We could see a bounce even above this margin pressure level. Well, what's our risk to reward ratio here? It's 3.4-1. That means roughly out of every 4 times, we only have to be right less than 1 out of 4 times. That's a fantastic risk to reward ratio, and it's extremely justifiable. It's extremely justifiable to think that Bitcoin can go to 79K, right? We're in a bull market. We're expecting some positive price action. There's a Bitcoin spot ETF on the horizon that maybe could get passed. We don't know for sure, right? It's extremely justifiable. You put your stop loss down here, and guess what? If you get stopped out and Bitcoin comes all the way back down to 44K, look for another trade. Look for another long position. Look for the bounce off of this long-term trend line, right? Put your stop loss down here. So I hope this is helpful in understanding that if you're trading with stop losses, right, putting your stop loss in a position where it gets your money out of the market, it exits the trade before you lose, hence it stops the loss, at a good risk to reward ratio, it's okay to get stopped out of a trade. It is completely fine, because even if we get stopped out 3 out of 4 times, as long as we have reasonable risk to reward ratios and reasonable price targets that are realistic, you're going to make money. You're going to make money as long as you follow good risk management. Now, one thing that I do want to mention, if we get a bounce off of this this level here, right? If the bids start coming in here and you're long, or you're just looking for a place to exit Bitcoin, you think it's going to go down to 53K. I'm a big fan of, let's just say we get a bounce out of Bitcoin, selling the downtrend retest line. Why? Because this is going to be a resistance depending on where if and when we come up to test it. And it sets you up in a position where you can very oftentimes take profits off the table, de-risk, right? And play both scenarios. What scenarios can happen here? Well, one, we break through and test it as support on the way back up in a bump and run pattern. That's what we did over here, right? We look at our bump and run pattern. We had our downtrend line. We had our retest. We actually broke through it. You could have sold the retest line, right? Even though we broke through it, and then bought back in cheaper on support down here. And that's what's going to happen 9 times out of 10 whenever we break through a downtrend line. Right? So you can sell this downtrend line, buy the retest on the other side, buy the bump and run, and you've secured profits, you've de-risked, and you've gotten back in cheaper, right? Or at least at the same price as we go back up. Now, what's the other scenario? The other scenario is you sell the retest line and we start coming back down, and you can buy these support levels again, right? And then maybe we bump and run. So either way, you're de-risking in a downtrend until we've confirmed support on the other side, in which case you still get to get in cheaper, right? The worst case scenario of selling the downtrend line is that we just blow straight through it. And that's really unlikely to happen, right? Even when we do blow straight through these downtrend lines, very, very, very often, right, we come back down to get them. I'm going to take you to a flash in the past to when Elon Musk put Bitcoin in his Twitter bio back here in January of 2021. What happened? We were in this downtrend line. We were in this downtrend, right? If you sold the retest here and we just completely blasted through on this news of Elon Musk putting Bitcoin in his Twitter bio, looked like a runaway freight train. It looked like the wrong decision to sell at 33K and de-risk. Well, we were in a downtrend, so you still got to de-risk, but then we still came back down. Even after going all the way to 38.5K, we still came back down to retest this downtrend line, giving you an opportunity to get back in. So this is how you make money in crypto, by trading and managing your risk and managing different scenarios.
Token Metrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at tokenmetrics.com.